What's up everybody, Tom here with another video. In today's video, we're taking a look at the latest stock market news moving the markets right now. We'll also be taking a look together at our technical analysis levels for the S&P 500, Nasdaq, Bitcoin, gold, Tesla, and dollar index to try to get a better understanding of the current market movements. Big moves on dollar index and of course Tesla's inclusion into the S&P 500 with new news out today has the markets moving. Let's talk about that and more right now. Stay tuned. So as we like to do together, let's take a look at the last 24 hours in the stock market in the US. It turns out that yesterday was all about chip manufacturers. Look at this, AMD up another 6.27%, breaking past a key resistance we talked about live yesterday. Apple also having a great day. Some of the healthcare sector having a great day. And that was coupled by some losses in other sectors such as banks and energy sectors. Some of the ones that have had the best recovery recently. We also saw some big news from Moderna, and that of course sent the shares moving up quite a lot pre-market into market open. So what happened on a typical Monday? Well, the market always seems to like trapping the retail traders in the first hour. We saw declines come through in the first hour, followed by a steady uptick in certain sectors, especially the technology sector, with a close at the end of the day slightly positive. On the flip side, we obviously had the Dow Jones down the most, led by those financials and energy sectors not doing so well, and the S&P 500 at a 0.57. When we take a look at the sectors themselves, technology did the best and energy was a clear underdog at negative 5.53%. But if we put it in perspective, if we take the last couple of weeks since energy started running, energy's still up quite a lot. And this was off the back of OPEC news, and also really a technical level was reached by US oil and UK oil. They hit a very key resistance that we've been talking about in this channel, and that's really, I think, what's led to them selling off a little bit. In broader news, S&P 500 is actually taking all of Tesla in one gulp, and the shares were surging after market, up about 4%. So we'll take a look at that, as it's pretty big news, and they're taking a huge amount of Tesla, and it's going to be now December 21st. So we've got the date as well. Some very cool news for Tesla traders out there. What about the CBOE put call ratios? What about the fear in the markets right now? Well, we saw put call ratios rise a little bit to a 1.64 figure for the S&P 500. And we can see here some of all products, calls still outweighing puts currently in the markets. So when we're at a resistance level such as we are on the S&P 500, if we still continue to see more and more calls open, we use this as a contrarian indicator to probably show us that we are going to see a pullback or decline. Remember, it's after Thanksgiving now, and Thanksgiving is usually the big positive week. The week after can be a little bit of mixed results. What about the fear greed oscillator or indicator? That's actually pointing to an incredibly high rating. Check this out, guys. Almost 100 over here for the fear greed over time, and it hasn't been that high since really before, and of course just before, the current crisis. We haven't seen a rating over 80 in some time, so that really has my, I guess, interest peaked in terms of what happens next in the stock markets around the world. This is a very high reading, and we'll continue to look at this as it's showing us that we need to be careful in the markets at this time. Put call ratio oscillators from CBOE basically coming off the low. We are seeing a series of more puts being opened. We'll continue to monitor this throughout the week, but at this stage, it's kind of in the middle of nowhere. It got down really low, and if it had hovered there for a bit longer, we would have been pretty positive that the market was going to have a dive and of course correction. But in this case, it looks to be in the middle. It's not telling us any strong signal right now. So let's talk about this US dollar index. Well, the US dollar, it does not want to be under this 92. It's come back up to the 92. We were talking about this live yesterday. It went as low as 91.50, then bounced all the way up to the 92. And now it's kind of testing the level of support from, of course, the bottom to the top. So we're basically going back, and will now the bears regain control of the dollar index? One thing that I'm always looking at here for the dollar index as the point of call where the bulls and the bears will truly fight it out is this 20 moving average on the daily. So we've got one touch, two touches, and then of course, if this 20 comes down, let's call it a 92.20 level, maybe somewhere around here, and we see the dollar index come back up to it, this is going to be one of those key zones that we think that we may see further bearish pressure in the dollar index. So very important kind of level here. And do remember, as we did in our weekend analysis, it has been known to get through down below here. The monthly is now closed. What's the monthly telling us? The monthly is telling us it still was unable to truly close below the 92. Look at this monthly, 91.991. We'll call it 92 basically. It was unable to close the monthly underneath. That's big, I think. That is very important that it didn't do that, because for the dollar bulls, that could be just a fake out. Remember, we want to do the monthly, weekly. It's why we do the top-down approach. Monthly is most important candle, weekly next most important, etc., etc. So dollar index has really found some level of support, and we'll continue to watch this daily 20. I think that's probably the one that I'm looking at most right now in the markets. What about gold? Well, gold has hit that kind of key level. We talked about it on the weekend. The 50 exponential moving average, the blue line here, has been reached twice. And usually when it gets reached twice and it finds support, the third time is also a good level of support. So that's very important for gold. We're right around that 1750, 1760 area. There is market structure resistance over here, which should act as support if it goes under a little bit. And we continue to watch the smaller time frames for clues here on things like gold. What you want to do is, if you're going to trade it, let's say you want to buy something like this, you want to dive into the smaller time frames. You want to bring up stuff like maybe a resistance that's been reached recently. Check the market structure, check the way that it's kind of bouncing between these zones. And then of course, if it bounces, closes above this area, maybe even you need it above this area as well, and then comes back and retests, and you get like a little smaller time frame lightning bolt or something, that's going to act as a very good conservative entry if you're wanting to take it long. Remember, if you're buying it here, all you're doing is really similar to what happened over here, where you're not letting the structure play out and show you that Wall Street and other bigger players want to take this thing long. This is just resetting all the indicators, and then when it broke through, look at the amount of volume that came in. Try not to catch the falling knife, and try instead to have the plan to go towards, of course, where Wall Street is. Get involved in the gap fill, in the range fill of the free space between structure points. That is the key, I believe, to trading in many ways. Silver, very, very similar. We're a bit more bullish on silver than, of course, gold right now, as it has properties due to recovery. Silver has come off this 22 very nicely, bounced straight up. It's coming back to the 20 moving average now, and we do expect silver to have some problems at 23. Why is this? Support, support, support. Very key level. If we come down after 23, maybe we go and test the bottoms again. But we could also bounce back up and come through the 23 and close above. If this happens, that's your signal really that you're looking at longs now for silver. At this stage, you're only looking at shorts because we're underneath the very key zone of 23. But you can see here, guys, 3 touches, 4 touches really, very key zone. We expect that to become some form of resistance, and there should be some good technical fights between the bulls and the bears around that 23 if we get there moving forward. All right, so let's just quickly go through cryptocurrencies. And boy, oh boy, has it been a great 24 hours for cryptocurrency traders out there. I'm sure a lot of bulls in Bitcoin are celebrating. Let's just go through a few amazing TA kind of perspectives on Bitcoin here. Amazing touches of the 20 moving average and bounces off that. Just shows you how important this is to look at. We go down to something like a 4 hour, and we can see here a beautiful double bottom, very nice double bottom, intervening peak, and then of course a close above, really above that wick, signaling bullish intentions, and it's gone just full crazy mode since then. This is the type of thing that we're looking for in cryptocurrencies. Where to now? So I mentioned this yesterday. Really, yes, it could go and touch 20,000 straight away, but if it starts to coil underneath, let's say it starts to create a lot of structure underneath and doesn't hit 20, do we think it just goes and hits 20, finds resistance? Very unlikely. When a market coils before it hits a key zone or a key psychological level, when it breaks out above, it has a tendency to smash that level, smash it. And that is what is looking like right now, but we'll have to see more. If it goes and hits 20 off this one, it may just hit 20, find some resistance around that area. But if it continues to coil and then breaks out, it will most likely smash that key zone. That's very important to note. Ethereum was very similar to, of course, what we saw on Bitcoin, another amazing structure support through this level. If you check out 480, 500 in our previous videos, you'll see why we like this level so much. Broke through, very nice close, even came down, gave everyone the conservative entry. Look at that, 2 moving averages, the 20 and the 50 acting as dynamic support as well, which is awesome. And now we're reaching back to the stars, back to the previous resistance. Now we feel like Ethereum has a little bit more in it right now. We talked about the 800 level. Will it go on to reach the 800 level? It's certainly very possible. And it makes probable sense when you look at things like the weekly. Take a look at this. Previous weekly, when it was on that really big bull run after doing a nice break, it reached the 800 and kind of found some resistance and sold off. It then reached the 800 on its recovery after the crash and then, of course, sold off. So 800 seems like a logical thing, but every $100 in Ethereum is going to be a strong level of resistance or, of course, support moving forward. We've seen that quite a few times. XRP, another good one, another one of those ones that's found some really nice levels. Really great structure through XRP. You can see here the buying pressure that comes off the 58 after it acts as resistance. And you can see here the buying pressure that comes off the previous resistances, which is happening right now. So very, very nice for XRP. And we expect it probably to continue up with the other cryptocurrencies as well. So let's move on to Tesla right now. Tesla having an amazing recovery to 600 here. Well, it wasn't even a recovery, it's all-time highs for Tesla. And this was really, I think, shown to happen very similar to what we said with really Bitcoin when it broke through this 462 kind of zone. This 462 zone, let's take it back down here, was the key level of resistance. We saw the close. We know that Tesla has, and this is your instrument analysis, we know that Tesla has a tendency to break and then go nuts after that movement in terms of FOMO takes phase. And that's what happened here. We saw a big move to the next psychological zone being around the 600. We then saw some resistance and profit taking happening there. And now we've seen a 4.42% move to 592 in the post-market trade. Now, what do I think about Tesla? Well, I knew that the 600 was most likely going to act as some form of profit taking. Now we've got that new news, maybe hype gets back into it, but I still am looking at this 20 moving average on the 4-hour and the daily and saying, look, the market's pretty far away from that. It's hit a key psychological. We're in uncharted territory. Possibly we go back up to the previous peak, some profits get taken, and then we see a bit of a decline back to these kind of levels, back to this 20 moving average on the significant timeframes, possibly even back to previous resistance acting as support. So for Tesla, it's still a bit of cautionary tale. You're still in an uptrend. If you're holding it long term, you got nothing really to worry about right now. It all looks good. But if you're trading it, you might want to see a little bit more based on this kind of post-market hype that came through. It may not be sustainable. Let's now take a look at the broader market. So we'll look at the S&P 500 first, and we'll talk about what's going on there. Let's go down to the daily here. So another day, another miniature resistance kind of sell-off happening on the S&P 500. We saw it was only down about 0.5%, 0.46 to be exact. But at one point, it did get down to 3,600 and then it bounced off that level. Will we see another day of selling pressure? If we continue to see selling pressure, we've really got this week, we're talking about 35 kind of 20 being a very key zone that we're looking at on the S&P 500. We'll continue to look at that one. But remember, the market, since moving up, since the US election, has not touched the 20 daily moving average. This doesn't usually happen for too long. Even over here, it touched the 20, it went kind of crazy, and then it was met by a fairly significant sell-off during, of course, that September period. The longer we stay away from a 20 moving average and move up, especially if we continue to move up, the more chance of one of these kind of events occurring. So for a healthy market, we need it to come back down, hit the 20, and then of course find support. I'd be looking for at least this level in terms of a corrective bias right now, and anything underneath this zone, we'll talk about that later on in the week. So definitely follow us to talk about these levels. I think there could be some interesting ones moving forward. What about the Nasdaq? Well, the Nasdaq bounced straight off previous resistances. Resistance became support yesterday during the market trade, and it bounced off incredibly heavily. Look at this, full wick rejection. That just shows how many people want to be in the market right now and how many people are buying technological stocks. Again, the 20 moving average has been touched twice and respected. So it remains kind of that key level where if the markets pull down, if the S&P pulls down, it should hit that and find some level of support. It's not much. I mean, you're only talking about 350 points here, but it is something. And that's probably the level that we expect markets to find some kind of buying pressure. If the market gets through that 20, then of course we move back to key structure points, 11.8 being previous support and 11.6 being the really great level that we saw before. So all of these levels are open right now. There's no clear indication from the market about what it wants to do. At this stage, it looks like it wants to kind of slowly get up to the peak. Possibly then we find some rollover and then we get a small amount of a pullback, which gives some people an opportunity to possibly get back in. All right, guys, well, I hope you enjoyed today's video. We obviously covered quite a lot. If you did, remember to subscribe and, of course, hit that like button. And thank you very much to everyone that came out for the live session yesterday. We had a great time. We spent many hours going through key technical analysis kind of zones and areas on all sorts of stocks, and I'm loving what we're doing there. So thanks very much. You guys are awesome, and I'll see you in the next video. Remember, make as much money as humanly possible, but only in a safe way. Bye for now.